So it's our last edition of Frontier Opening Bell for this week. I'm Temple Ashaji. Welcome to the program. Thank you for joining us. On the show this morning, we've got Ali Kansachu, the founder of Rich Frontiers Management at Nairobi, Kenya, and of course, Botswana Mofaye, executive editor at Frontier Africa Reports, joins us on the show this morning. Thank you, gentlemen, for coming along this morning. Let's hit the ground running first with the indexes. The position they had yesterday was for Nigeria, negative 0.51% down. BRVM Stock Exchange was negative by 33 basis points. Egypt Stock Exchange was also closed south, 0.17%. Kenya was positive, maintained its momentum by some 0.71% yesterday, and South Africa rose by 1.23% on the Johannesburg Stock Exchange. Moving on to the headlines from the eastern part of Africa, Kenya, in the Kenyan part of the region, we have SASRA giving some permit of to 175 SACCOs, deposit-taking entities. Car and General raises stake in Watu Credit from 26.5% to 29%, pumping in some 38.6 million shillings. And in Ethiopia, the Ethiopia Commodity Exchange inaugurates the e-trading center. Fitch retains the BBB rating for Mauritius Commercial Bank, while CRDB's Q4 2020 earnings per share is 63.2. At this point, profits is actually 164.9 billion Tanzanian shillings. Well, let's bring in Ali to help us to understand some of these headlines, especially the one around the commodities exchange and any other peaks that you might have, because it looks like Africa is becoming more and more aggressive around commodities exchange at this point.
Oh, I mean, as we all know, there's tremendous value creation in commodity exchanges. You just have to look around globally at the global commodity exchanges and the amount of value creation that comes from that. And I think this is a very positive development for Africa as it seeks to move upstream in terms of as it seeks to sort of capture more of the value chain around the commodities that it's sending to the rest of the world. I think Botswana is pushing in the same direction, and Ethiopia had previously introduced a commodity exchange. There was a very iconic lady who developed that, so it's interesting to see what they're doing exactly. But you know, the complexities for Ethiopia were that they weren't prepared to allow people to buy and hold. They have quite a sort of aggressive attitude towards the types of things that commodity traders like to do, which is, you know, buy commodities that they feel are cheap in the expectation of selling them later. Ethiopia just wanted pure price transmission. So it's worth keeping an eye on. Obviously, you know, one can't discuss Ethiopia without looking at the current overall environment. The UN has expressed tremendous concerns about accessing Tigray province. We've had a very challenging situation, military build-up of the border between Ethiopia and Sudan. We've had the entry of Eritrea into the Tigray province, and we've had quite a dramatic sell-off in the one Ethiopian Eurobond that's out there. It's slipped about 250 basis points, which is quite dramatic when you look at this kind of thing. So, you know, in that context, of course, finally, with respect to Ethiopia, it was the fastest growing African economy for more than a decade. And the question is whether the political scenario will pressure the economic situation. And I tend to think that's inevitable, predicted and predictable. Although I saw that the in-house Ethiopians were talking of 8.7% growth this year, this is just impossible, given the current scenario we're facing. And they're also facing challenges on the international investor front. So we've got to keep an eye on that. If I can go to some of your other headlines, SASRA allowing 175 SACCOs to become deposit taking. the SACCO movement is quite a unique phenomenon in Kenya, and a very successful one. There's tremendous capital within the SACCO movement, and it's seriously an interesting development. And in Kenya, they have plenty of capital to play around with. And it's well worth, if you're looking at Kenya, looking more deeply than the banking sector, which everyone tends to look at, and looking at the SACCO sector. It's pretty sophisticated in some areas, in others not so, but there's a lot of capital formation in that area. Want to credit, this is an interesting investment. Harith General delivered very good full-year earnings earlier this week. Up about 40–45%, pretty impressive. It's one of the smaller companies at the stock exchange, but they made a big push into 2- and 3-seater bodas, and basically have expanded across the region. And what to credit is their vehicle for financing the purchase of those vehicles. And it's been very successful and very well managed. If you're looking for a smaller company which has potential, I would tell you to look at Harith General for sure. They've been executing well for a number of years, but their main thrust has been into this vehicular niche. And then finally, you're talking about Mauritius MCB, BBB minus. Remember that banks, wherever they domicile, cannot be rated higher than sovereign. Mauritius Commercial Bank, big bank in Mauritius, has been looking to expand on the continent. Mauritius remains a conduit for particularly Indian investment onto the continent because of the double taxation treaties Mauritius has with all these African countries and a relatively sophisticated banking sector.
Ali, before I cross over to Bosun, does it worry you that the rating agency has now, Fitch has now said that it will no longer provide ratings and analytical coverage for MCB going forward?
Excuse me. Absolutely, that's very alarming. I've got to dig more deeply into what exactly led to that pronouncement. I don't know if you've got any information, but I was a bit taken aback by that because in the current world, you know, I know many of us on the continent are upset with the ratings agencies, but they've got a job to do, and I think, you know, in the long run, they tend to be reactive. That's the nature of the game. But, you know, you can't operate in a global environment without, you know, the ratings agency is a serious imprimatur if you're going to be a big boy and play with the big boys in the banking sector.
Sure. Sure. Bosun, let's now come to you for your thoughts on these headlines, especially the Mauritius, which is now left hanging here.
I think the Mauritius Commercial Bank Fitch rating, as Ali puts it, you can get a commercial rating other than your sovereign, by the way. So the sovereign comes first, then the subnationals, then you have the corporate rating, and you can't get anything better than that. But I think Mauritius Commercial Bank is one of the big banks in Mauritius, by the way. But then I guess the overall economy, the state of, remember the oil spill, the Japanese oil tanker spill that spoiled the whole Mauritius paradise of the Indian Ocean last year during the pandemic is yet to clear off, and the authorities are trying to grapple with a whole lot of issues around that particular corridor. I think that is all I have to say on Mauritius. Ethiopia Commodity Exchange, I think, is a good step to get an e-center. Everybody's trying to ramp up. The Ghanaians are retooling their own commodity exchange. Nigeria is revamping its own national commodity exchange. I think Botswana is also getting set to do a multiple exchange, multiple products exchange. So commodity exchange, with a whole lot of what we have between agri and mineral resources in Africa, we have quite a lot to do with exchanges.
Sure. Thank you, Bosun. I agree totally with you on that. Let's move on to the western side of Africa, where S&P Global says that the global bank credit losses are stood at $1.8 trillion for 2020-2021. Of course, that cannot be far from the pandemic's effect. Forecasts 15% lower than previous. Regional variations now seen. Of course, Nigerian court also wants ExxonMobil managing director arrested on EFCC fraud probe. CBN, now that's the Central Bank of Nigeria, revises February 2021 non-deliverables forwards FX to 412 naira per dollar. WARA confirms Sonatel's long-term AA rating, and Mali injects some 25 billion CFA into UEMOA financial markets. I think we have Luke Ofojebe joining us now from Vertiva Capital Management. Thank you, Luke, for coming through. I know you've seen some of these headline picks before now. Would you mind wading into them and having a go with some of them?
So good morning, everyone. So I will just start with the ExxonMobil fraud charge. For us here, I think it's something that has always been in the play in the oil and gas space. I mean, the major issue we have in the oil and gas sector we have here in Nigeria is that of transparency. I mean, there are a number of times when some government officials have come out to say some of these upstream players are not complying with some rules and regulations, especially when it comes to host communities management. So, I mean, it's just one of those things we believe that the PIGB will come and address. I mean, it will help to address this issue of transparency, ensure that the rules and regulations are clear to all the upstream players in a way that we won't be seeing things like, breaches of agreement. I mean, it was also what happened in 2018 when the government actually asked these upstream players to pay taxes that they were owing since the 90s. And it wasn't really that these oil players were not paying those taxes. It was just that the regulation was not clear. But thankfully, early 2019, that was amended, and we saw like a flat tax rate for offshore drilling. So I think with the PIGB coming into play, we will see more clarity in that space, and that will help to drive further transparency.
Sure. Thanks a great deal for that, Luke. Bosin, let's come back to you now for some of these headlines. I mean, you've got the West African Rating Agency confirming Sonatel's long-term AA rating. Mali is also injecting some huge funds into the West African Union monetary markets there.
Yes. Yes, thank you, Tempo. I think I want to speak to the bigger picture, if you allow me, of the S&P Global ratings, and I'm sure Ali would want to touch on that as well, because when you look at the global banking sector credit loss of risk of 1.8 trillion US dollars, that's a whole lot. That's almost the size of the stimulus that the Biden administration is trying to push through the Congress right now. So it's a whole lot of, even though there will be regional variations across the various regions of the world, but it's something to really think about of what the market would be thinking of this particular risk. We've done so much stimulus pumping, about $12 trillion globally speaking since the pandemic started. So there's a whole lot of concerns out there about this particular risk, even though the revision is 15% lower than earlier forecast. Thank you.
Great. Thanks a great deal for that. Ali, your thoughts on this?
Yes, I mean, obviously S&P is reducing the forecast for losses and also spreading it out a little bit longer. I think, this is informed by enormous liquidity injections that we've seen globally, and also probably a more optimistic outlook on the vaccines and therefore a recovery. But, I, for one, I don't want to be a pessimist, but I'm a little bit, I think we're hitting maximum vaccine euphoria at the moment. And also, I think we're assuming that, there's a silver bullet out there and everything's going to be back to normal in 6 months' time or something. I'm not so convinced, and therefore I would be a seller of that S&P calculation.
I appreciate that, Ali. Thanks a great deal. Let's move on to the Southern African market, where the South African Reserve Bank announces the economy of that country growing at 3.6% this year, 2021, and 2.4% in 2022. The Financial Sector Conduct Authority is also issuing a health warning over crypto assets in South Africa. Harith General plans SA's first gas-fired plants in Joburg. And of course, in Zimbabwe, the US and EU sanctions unfair markets rallying, says analysts there. Earlier, we talked about the aggressiveness of countries in Africa about the commodity exchange. Here's Botswana are now planning a multi-commodity exchange beyond just minerals. Let me come to you first, Bosun. Hear your thoughts on these particular developments in the Southern African markets.
Yes, I think I will speak on Zimbabwe because yesterday evening we had an interview with one of an economist and business analyst on what is going on with the virus vaccine, and it took time to explain what the administration of President Mnangagwa has been doing. They're still very bitter about the fact that the Western world, US and Europe in particular, Britain to be more specific, is yet to really open up, and I say it's very, very unfair for those sanctions against Zimbabwe to still remain in place. And I went on to talk about some of the things that they're trying to do. This handshake across the Eastern Europe, Russia, and China still in place, but not as forthcoming or as resounding warm as it would have, as with the West, when things were still going on well before things went sour between the late President Mugabe and the Western economies and powers. But again, he spoke about the currency, the new currency exchange market, which they put in place around June last year, which is now working. Exchange rate a little bit more stable. Zimbabwe Stock Exchange last year was about 50% return on the index. That is also being touted. But as far as the vaccine is concerned, $100 million to get vaccines in is still being considered very little, but at least to be a good step in the right direction to start with. And finally, for me, from Southern Africa, is about the health warning around the crypto currency. I think that's the Surgeon General warning that crypto trading is dangerous for your health. In other words, a lot of South Africans are now, according to the report from moneyweb.co.za, a lot of South Africans are filing reports of losses on cryptocurrency. I think one of the companies, I think IMT, I can't remember precisely now the name, has a lot of cases. The FBI, even in the US, have been invited into, as part of the investigations going on in South Africa. A lot of them are getting their fingers burnt in crypto trading in South Africa. So I think this health warning, as it were, financial health warning, I'll put it that way. It's a whole lot of issue. Ali, smiling.
Sure. Ali certainly has a lot to tell us about that. The crypto assets, in spite of the fact that, yes, there's been a draft proposal for regulation or around that asset or instruments in South Africa, but it has not been implemented. So what are your thoughts on these? And of course, the economic forecast by the SARB?
So let me first start with the subject, cryptocurrency subject. Every single year, every regulator in the world has told us that you're going to get your fingers burnt, you're going to lose money, you're going to get messed up. And if I go back to the chart since 2010, had I put my money in Bitcoin, I would have made money nearly every year. And the returns I would have generated would have protected my family's wealth and would have made me, exponential returns. This is a fact. Now, when I look at it, in my analysis, I think there is a clear case for Bitcoin as a store of value, which I think it was designed to be. Of course, we then have, this multiplication. It's like a virus of other coins and stories. We've got a Doge coin or whatever, which can be pumped up 50% just by Elon putting out a meme. So also, when I look at it, I think it's the most speculative bubble that we've witnessed. Where it is the epitome of our age, the zeitgeist of our age, these extraordinary price movements. And I just worry because, some of us have seen market crashes. Of course, it bankrupts all the short sellers before it crashes, but then eventually, reality returns. So I agree with the health warning, but I'm also cognizant of the fact that, people have been crying wolf for many years. And, you know, had I ignored that cry, I would have done far better than any bond would have done, or any foreign exchange or any investment.
You don't sound like an apologist.
Yeah, you know, it's, well, I'm just a realist. I'm a trader. I've got to look at the P&L and say to myself, my God. Now, with respect to the SRB's projections, 3.6% in 2021, of course, that would be snapping a losing streak of, I think, 5 years, posting positive growth. Of course, you've got the rebase effect that you are then following on from a very tough year in 2020. I think Ramaphosa would take 3.6% with both hands, but so much, in my opinion, depends on how the virus unfolds. And my concern remains that if you look at the cases now in Southern Africa, Zimbabwe record highs, Mozambique surging, Zambia as well, you know, my concern is we're a little bit like this place in Brazil called Manaus, where, you know, it went wild, the virus mutated, and my concern is we've created possibly a petri dish, which and the implications of that might not be felt for a couple of months or 3 months. Then, of course, every day I see people tweeting, you know, we're getting a million vaccines, but, you know, it's like a drop in the ocean. We're 1.3 billion of us, right? So, I mean, you need 2.6 billion vaccine doses, as far as I can work out. So, you know, as I said, there's a lot of vaccine euphoria. We've got to keep an eye on that. And let's hope that the worst outcomes don't happen across the continent. Zimbabwe, interesting. I mean, you know, they've been complaining, but the proof will be in the pudding. Can they reach out to Biden's administration? Can they change the direction? I think this is a big job for the foreign minister. Are they able to do it, or are they going to keep complaining? Because, you know, they've got good at that. But you, at the end of the day, you complain so much that you've got to do something about it. And I think, you know, with someone like Biden, if they can get into a conversation, they might be able to extricate themselves from this situation.
I appreciate your thoughts, Ali. Luke, before we cross to the Northern African market, I mean, the South African market is a bit closer to us in West Africa and a prominent one. Do you have a contrary opinion on the crypto asset story?
Not really. I think I share, to some extent, I share similar views with Ali Khan. Yes. And the reason is this. So when you look at Bitcoin itself, I mean, there are a number of coins out there, but I just want to focus on Bitcoin.
Yeah.
So when you look at Bitcoin, the blockchain infrastructure, clearly this actually offers great benefits to the whole world, not just to advanced countries or developing countries, to the whole world. But when these benefits are exaggerated and you start, you know, when everybody start talking about it, oh, Bitcoin is this point, people start buying, you know, so, and that begins to drive, you know, volatilities in the market. So for some people, when they notice that, oh, this coin has really rallied, it has gained about maybe 100% within a couple of weeks, they begin to take profit. So people who buy in due to fear of missing out, those ones begin to record losses. And I think these are the ones that are claiming that, oh, they should stop trading off cryptocurrencies and the likes. No. Bitcoin itself is actually a very good thing. I mean, if you study it, you realize that it has great benefits. It's just that, you know, not being able to get in at the right time is also one of the issues. And I also think that for it to be well adopted across different economies, then regulation needs to come into play. Right now, regulation around Bitcoin is not that clear. I mean, central banks are saying this today, the next day they are saying something else. I mean, they need to come up with clear regulations on trading of cryptocurrencies, because the reality is that there are a number of people, especially in the Asian markets, who are just using this to carry out, you know, fraudulent activities. You just hear strange coins, this one can do this one can do this. And after 2 months, that coin will just literally disappear, stops trading. So these are the people that, you know, they just find a way to just steal money from people. So if that can be regulated, then I think if the blockchain network itself can be regulated, I think it's actually a good one for people to invest in. Then when it comes to store of value, right now, I personally do not see it as a store of value. Rather, I think it's something you can use to speculate on how you can gain more wealth from the way it is. It was initially designed to be a store of value, but given how the sentiments around it, the talks around Bitcoin, it can do this, it can return 10%, blah blah blah. And right now it's more like it is something more or less close to a Ponzi scheme, but not really a Ponzi scheme. So for now, it's just something you use to speculate on wealth, not really a store of value as it is now. Maybe when regulation comes into play, then it can be a great way to store value.
Generally,
I think I agree with Luke. If you allow me, Temple, for just about a few seconds. I think the whole idea when blockchain, cryptocurrency, whatever came, was all about being a store of value. And I think some of the regulators were saying, okay, perhaps if they say you want to target gold or other assets or silver, no problem. But again, it's become more of a trading thing that, like you said, some coins just appeared in 24 hours, in 90 days, like a treasury bill, they just disappeared out of the skies. You can't find them again. And it's just so, it looks like folks have seen more of trading. So I think that's why the regulators seem to be pulling back a little bit. Because I think a year or two ago, the regulators seem to be warming up towards this cryptocurrency and all that kind of a thing. Then suddenly they started pulling back. Even the US Fed and the rest are beginning to take another step back and take a second look again at it again. What exactly are we dealing with? Is this something that will have a value for the entire financial system and the global economy? Or we're just dealing with some things that some folks, young folks online, whatever, believe that, yes, if you trade it, you make money out of it. So it looks the news and noise around crypto, whatever, has somewhat changed from the initial way when it started a couple of years ago. My apologies, please.
It's fine. Well, we've got a couple of minutes, 2 or thereabouts, to the end of the show. Ali, let me get you to have a go with some of the headlines in the Northern African markets. The Commercial International Bank joining 2021 Bloomberg Gender Equality Index, and maybe the UK CDC group taking some $100 million minority stake investments in Alfa Medical Group.
Yeah, so just quickly, of course, Egypt did not adjust rates yesterday. They left them unchanged, maintaining a very attractive destination for carry traders. With respect to this gender index, I think we're going to see much more of this, and the smart African corporates will have a group that will be focusing in on these opportunities because it raises visibility in the investor community globally, and also it's been shown to improve performance across corporates. I think we'll see a lot more of that kind of activity. DDC, as you know, the old Commonwealth Development Corporation, one of the biggest investors on the African continent. I saw some returns they've generated. They've generated returns significantly higher than their peers and significantly higher than UK investments in general. They are pretty sharp. They have lots of people on the ground. They've indigenized their team. And obviously, medical is red hot these days. You've got 1.3 billion of us. We need clearly more healthcare. And I think that's in line with what I'm seeing, which is increased investments in hospitals, but also the digital delivery of medical care. I think that's the really sexy space that people are looking at. And, if I was an investor, that's where I'd be looking.
I mean, this year alone, there's been so much of investment in the healthcare sector of Egypt in particular. And that is really, really true. Thank you, gentlemen, for all of your analysis on all of these headlines on Frontier Opening Bell this morning. Really appreciate your thoughts. Ali Kansachu, founder of Rich Frontiers Management in Nairobi, Kenya. I'm wishing you a wonderful weekend ahead. Bosin Amofaya, executive editor at Frontier Africa Reports. Thanks a great deal for joining us on the show. Luke Ofojebe, you made it. Thank you all the way from Vetiva Capital Management. Do have yourself a wonderful weekend. I'm Temple Ashaju. I'll see you next time. Bye for now.